Ruben Valdes, welcome to the podcast, brother.
Hey, thank you for inviting me. Appreciate it.
Absolutely.
Yeah, let the audience know, the spores, what you do and what you're all about.
Awesome. Well, definitely. Well, thank you for the invitation. I do a lot of representation before IRS and the U.S. Tax Court. So there's a lot of people that get into tax problems. You file your tax return, and then every time you file a tax return, they put a score to it. All right. So if you ever get selected for audit, that means that you had a really high diff score. So those people get selected for audit, and obviously the IRS wants proof of all the expenses they have a business that they have. So therefore, they have to submit themselves to the procedures of the examination. And if you don't have the proofs, then they can disallow all that. So there's people that get selected for audits. There's also the people that owe a lot of money to the IRS. When people ask me about filing their returns, you should always file a return because not filing it could be a criminal offense. But if you owe money, you have to make sure that you come forward and try to negotiate or come to a settlement with them, because if not, you go into the risk of IRS freezing accounts, contacting your employer that instead of giving you the money, send it directly to the IRS. So they put themselves in a very difficult situation. And then there's sometimes that the IRS just gets out of hand. So we have to involve the U.S. Tax Court. And then that's when we were like, you know what, IRS, you're reading the law wrong, or that's not the spirit of the law. So we go into U.S. Tax Court, and then you have the attorney from the IRS representing the government, you have us representing the taxpayer, and you have the federal judge that's going to rule whether it's called the preponderance of the evidence, which is like 51%. So if you imagine the scale, right, it's like as long as it's more likely than not that this happened, then we'll allow it. So we just have to prove at the burden of proof of the preponderance of the evidence. So that's how we sometimes beat the IRS.
That's intense work to be able to compile all that stuff.
What are some examples of the IRS just completely getting out of hand?
Yeah, well, first of all, specifically right now, it is crazy times. There has been a lot of cut in personnel in the IRS. The computers are completely going wild right now. So every time you owe money to the IRS, they have to issue a legal notice to you before they tap into your account. Guess what? Currently, the computers are missing that step. So therefore, you wake up on a Monday morning, your account's frozen. Let's say that you actually do have a business and you have 100 employees to pay. Well, in that situation, you can't pay all these employees. You have 90, 100 families that are living paycheck to paycheck, and you can't pay them because the computer never issued that notice. The problem here is that generally, we get hired until everything just hits the wall, right? So in the past, we could always just apply for economic hardship and get that levy released pretty quickly. Well, guess what? Right now, there's nobody there to process any of your information. So the levy stays. And after the 22nd day, so whenever the levy starts on your account, after the 22nd day, the actual money leaves your account, and it's practically impossible to get that ever back. So there's nobody there to answer your phone, but they're levying the account. So you have to really act pretty quickly right now. It's based on current events.
How do you get to that place where they're just sending that notice out? Is it being delinquent for years? It just random? Like, how do you know if you're even at risk?
Yeah. So, okay. Well, first of all, there's people that never file, right? They're just like, oh, I don't care. I'm not going to file my tax return. Well, under Title 26 Code 6020B, the IRS has the authority to actually file the tax return for you, which you're going to file it at in the worst position possible. If you were married filing jointly, they're going to file a single. They're not going to put any deductions. And the reason they do that is so they can actually assess the tax. Okay, once it's legally assessed, then they could go after it legally. So therefore, you're going to get a love letter saying, hey, you know what? You owe money. And then like another love letter. And then after the flow of notices, they're going to put you in the collections division. The collections division is divided into two, which is a call center, which is automatic collection systems. And there's also the revenue officers. You don't want a revenue officer involved. They are a mess. They're very difficult to deal with. And currently, most of them are new. So they're not following protocols. So once you get assigned to that, they're going to issue your final notice, okay? That final notice is the most important notice out of all of them because it's the only legal notice that they're obligated by the code to issue before they can levy. You have 30 days to file a collection due process hearing. If you don't follow it, they can actually levy your account at that time. So that's how people get into problems. And then if you file and you just don't follow up, well, you're still going to get into the same process. Flow of notices, you owe me, and then eventually collections.
So they're just going to take the money from you.
Well, yes, if you don't act. I mean, you can't be passive with IRS. You have to be always proactive. You have to take the first step. You have to come into, people get upset because they ruin their credits because by filing a federal tax lien, it's like, well, you didn't act quickly. You have to act quickly. When you owe money, you need to make sure that you come forward and say, let's do this. Let's propose either an offer in compromise. And we'll talk about other cases that have been pretty crazy, where we can definitely make a big difference for taxpayers. The IRS is like the perfect girlfriend. They don't care who you were, they care who you are. So you could have been making $10 million in the past, but right now you're working at Walmart greeting people making $20,000. They're probably going to accept an offer and compromise for $1, even if you owe $10 million. Why? Because they have no way to ever collect that from you. So it's always about what we call the reasonable collection potential. There's the people that can pay and there's the people that don't want to pay. The people that don't want to pay, they're going to see it rough because they're going to go against all your assets.
So even if you just screw up your taxes and at least try, you're going to be able to have better negotiating terms down the road.
Mm-hmm.
At least attempting. If like, bare bones, you're like, all right, I'm going to at least try to file something.
Mm-hmm.
It's better than not because you could just get completely wiped out.
Yeah, but what we have to be careful a little bit is that the return, whenever you file your income tax, you're signing under penalties of perjury. So you're saying that you have examined everything, and you have included everything. So they kind of put you in the spot. And that's why when you get selected for audit, there could be also a criminal referral internally if they catch that you're trying to defraud the government. Like all over the sudden you forgot to report $100,000 of income, or you're adding a bunch of deductions that are not permitted by the law, which we can talk that here later. But you're signing under penalties of perjury, so therefore that makes it they put you in the position where you better be truthful. If you're not truthful, you could be referred to criminal investigations. And go to, just for fun on a Saturday night, you can go under the Department of Justice press releases and you see everybody that's going into prison. There's a lot of people going to prison.
It's a wild Saturday night, my friend.
Yeah, I'm telling you.
Like, let's do that with your buddies.
Wesley Snipes, he had tax fraud, right? Didn't he go to jail for a long time?
Oh, yeah.
And he made great movies.
So I'm curious your opinion on this. I think there's two camps of thought on this. Let's say someone's very wealthy, or even if they're not very wealthy, but there's all these loopholes and different things in the tax code that you can do to pay less taxes or maybe virtually no taxes at all. And, there's the one camp that says, oh, well, the billionaires and the wealthy, they shouldn't be using that. They should pay their fair share. But then again, it's in the tax code. And most of the time, my guess is that it's a loophole. So technically it's legal. They're not breaking the law. I'm sure some are. But what are your thoughts on people utilizing the tax code to their advantage to then pay virtually no taxes if they're smart enough to do it, or they hire someone who's smart enough to do it?
I love the question, man, because anybody can use a tax code. Everybody should be doing tax planning. If you're complaining about you paying a lot of taxes or falling behind on taxes, it's because truly you're being irresponsible. Okay, we live in the United States. We have to comply by rules and regulations, but there's a lot of provisions that we can benefit from. All right. So it doesn't matter whether you're very wealthy or you're in the middle or in the low end. You can always do tax planning. We actually just taught a few courses of tax planning because you can reduce your tax liability drastically by doing things that are permitted by the law. And the thing is that when you talk about taxes, which taxes are we talking about? Because there's a lot of taxes. We have employment taxes, we have excise tax. So which are you talking about? It's just federal, because the country survives off of employment taxes, not really federal tax. Okay, so I think back in 2019, it was like 72% of all entire revenue that was brought by the IRS was from employment taxes. So anytime I have an employee, right, I pay them $100, I withdraw from their check the federal income tax, part of Social Security and Medicare, and me as an employer, I match their Social Security and Medicare. So the United States actually survives off of employment taxes. What we're talking about not paying any tax is federal tax. The federal tax issue, that you can reduce it using strategies that are permitted, depreciation on assets, cost segregation studies. I mean, you can do a lot of things. The thing is that we need to be organized. And people that are complaining about them owing a lot of money is because they're not organized. People start their own business. And we'll talk about online creators, OnlyFans, construction companies. They're not organized. They're a mess. They're not doing bookkeeping and accounting. Accounting is boring. I get it. But it's the most important fundamental of a business. If you don't have your accounting properly, you can't make proper financial decisions, and your tax return is going to be a mess. And how are we ever going to be able to defend your tax return positions if you don't have good accounting? That's kind of one of the things. If you do aggressive tax planning, you're probably going to get selected for audit. But that's okay. You know what we can do during that audit? We can drink coffee, and that's it, because we can back up every position.
Yeah, you know, if you're organized, there's nothing to worry about. Regardless of, like, you get pulled over, you're like, I'm not drunk. I got my driver's license.
Yeah.
I'm all good.
Absolutely.
I want to go back to that. You said, is it Neil? Was it the word for a mark against your tax? Lien?
Lien. Yeah.
No, but like when you file, there's certain things that if you do them weird or sketchy, right, you get, it was like marks against you, right? And then once you get a certain amount of marks, you're kind of flagged, right?
Oh, yeah. So,
yeah, how does that work?
Yeah, what you're talking about is about the div score, okay?
Div score.
Every time you file a tax return, we have a voluntary tax system. The voluntary tax system means that you can go and assess your tax. Tell the IRS how much you owe. So put your write-offs, your deductions, tell them how much you owe, and they're going to accept it without a problem. However, they are going to put a score. So they're going to put a score onto that tax return. The higher the score, the more possibilities you will be selected for audit. So questionable deductions or questionable positions on a tax return. Let's say that you are a 37-year-old male saying that you're a head of household with 3 kids. Where's the mother? Who knows? It's not on the return. You're saying that you're head of household and you made $25,000 in cash, no expenses. That's pretty shady. Something's off. You're hiding something, and you're probably going to be selected for audit. It's not that it's wrong, but if that is truly the reality, well, then that's fine, but you're going to get a high div score because it's very improbable for 35-year-old male with 3 babies, three little kids, making $25,000 a year. Because if you notice, that's a perfect recipe to yield a very high tax return. So that's one. And for business owners, bro, you always have a loss. How? You always have a loss. You have all these expenses. And then the proportion, right? You made $1 million and you said you only made $20,000 net after all the expenses. Interesting. Well, you have a hell of a hobby here because you don't have a business. So that's kind of one of the things.
So companies like Amazon, giant conglomerate, obviously, and from what I've heard, they operate in the red almost every year. And I think only a couple of years ago was their first year in the positive. So a company that size, how does that work? Like, do they just have so many people on the legal team and the tax team to like really back it up like you're talking about so they can go negative and show a loss every year?
So yeah, I'm gonna give you about the negative situation, okay? Because you could actually use depreciation, like Section 179, which a lot of tax gurus on social media like to talk about. There's other provisions, but Section 179, right? You can actually bring your taxability substantially lower. Let's say that I bought an equipment that it was $500,000. So I had $500,000 in my bank account, but I really didn't pay it in cash, so I financed it. I maintained my cash flow situation here pretty healthy.
But you depreciated the whole thing.
And you depreciated the whole thing. So you can use a lot of those tools. It doesn't mean that bringing your taxable income significantly lower based on depreciation or like cost segregation studies, which goes hand in hand. It doesn't mean that it's wrong. It's just like you can reflect on books like that, but it doesn't mean that you didn't make any money. It means that you're taking advantage of tax provisions, and that's the whole thing. It's like you need everybody that has a business, even if you're a very small business, you should have proper books, all right, and then meet with somebody to help you with tax planning. How can I keep more money in my pockets? And money doesn't mean in my bank accounts, meaning your net worth. right? You can do retirement accounts, other type of investments that could actually increase your net worth. People just want to take a big fat check home every month. That's not what tax planning is, all right? It's about your net worth.
What is cost segregation?
Cost segregation is actually a study that can significantly depreciate at a faster rate your real estate property. And a lot of investors with real estate properties, they always want to go through that route. It's a very powerful tool. It's very expensive generally because the savings are significant, but not just because of the savings, because they have to do a true study, which the IRS is going to question. Okay, so that everything has to be backed up. So it's important to use all these strategies to minimize your tax, but you need to be ready to substantiate every position taken on the return.
What are the common mistakes you're seeing? So you're talking about online creators, like we have some other businesses with this podcast. Slowly as it starts to make money, how do they fuck it up? But then how do you also set yourself up, especially in the beginning as you're starting to get income coming?
Yeah, well, definitely for, let's say, OnlyFans creators. The OnlyFans creators, they have an enemy in the tax code. It's section 262, which is that expense really a business expense or is it a personal expense? The business expenses is 162. The personal is 262. So you have to kind of wait to see, is that really a business or a personal? So therefore, when it comes to OnlyFans creators or any influencers in general, what happens is that a lot of things that you purchase could be used for personal reasons. So that is going to be automatically disallowed. And the tax courts have many tax cases on that. So therefore, there's a lot of people that go through cosmetic surgeries. There's a lot of people that get procedures done. All that is a personal expense. All right, it's a 262 expense.
Can you, sorry, real quick, can you take a percentage? So like sometimes you have your home or your car, you're like, I use this for 30% of the time. Could you be like, I got this surgery and it attributes to 20% of my success, and then 80 is like, because 80% of the time I'm living life and it's a personal?
Yeah, that is a great question, and I have the perfect activity for you next Saturday night to read Chesty Loves, okay?
Okay.
Chesty Loves was an entertainer that got humongous boob implants, all right?
Is she that like older blonde lady?
Yes.
Okay.
Yeah,
That's our homework. We have to go look at
that is another activity for Saturday.
I don't know if we're going to be able to do that.
Bring her in.
Give it a shot.
Yeah. So the tax court, actually, because it was a tax court case, it was one of the very strange exceptions where they did allow to depreciate. But she had to prove, right, that procedure was being so malicious to her health that she suffered from severe back pain, from severe, other medical conditions, that there's no way that there was any personal benefit from that. So therefore, the tax court says absolutely. And then one of the I don't remember the exact quote, but they said, if once you retire, are you going to remove them? And she said, absolutely. So it's kind of one of those positions. Whenever you get any procedures done, that's going to be constituting 262 expense. And then the same thing with clothing, lingerie, all that generally constitute a 262 expense because you can use it. Now, what you can use is it's costumes, right? Costumes that could not be worn on an everyday activity. So costumes could actually be deducted. Makeup, depending on what it is. If it's makeup like dramatic effects, like Hollywood, they use a bunch of makeup. You're not gonna go show up like that to a fancy dinner. So it's I don't really, that's a costume, so we can actually use that. However, there's a lot of ways to take benefits from being an OnlyFans creator or any influencer. It's about entity structure. Possibly become maybe an S corporation and do some tax planning, because whenever you're influencer, all that income you're gonna have to put on your Schedule C and is going to be subject to self-employment tax, federal tax. So therefore, whenever you elect to be treated as an S corporation, you're gonna have to pay yourself through a W-2. However, everything can be planned as a reasonable compensation could be $40,000. So $40,000 would only be what you pay on Social Security and Medicare, and then the rest you only pay one tax, which is federal. So it's all about tax planning, but it comes back to the core. You have to run your business like a business. No commingling funds. Whenever you're about to open up your business, open up a bank account only for business. Do not run any single expense that is personal through that account. That is the best way to lose the trust of the government in an audit. Have your separate account. Once you have that separate account, then we can discuss more about tax planning, what can be deducted, what cannot be deducted. So, and then the other thing is, let's say that I'm an influencer, I have 10 million followers on Instagram, and the Ritz-Carlton in Hawaii says, hey, why don't you stay at one of our best suites? It's $100,000 a night, totally free for you. So I said, okay, perfect. I'll go ahead and stay. I'll fly to Hawaii. I do a little streaming there. And I said, look, this is the best hotel, blah, 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 blah. So that $100,000, I accepted the gift. That is taxable to me. All right? I accepted the gift. There was no money exchanged, but there was a value exchange.
Like when people are on game shows and they win prizes, but they end up paying a bunch of taxes on this free thing.
Yes, and then the collaboration situation. So you have, like, for instance, let's say, hey, why don't you push this dress, this clothing, or shoes, whatever, and you can get to keep it. Well, the only way that the other company can actually deduct that is by sending them a 1099 because it's an expense, and you're paying somebody, you're giving something, you're giving them property, which is shoes or the dress or whatever, and the other individual needs to recognize that as income. So that's something that a lot of people don't realize. And then where it gets a little gray with OnlyFans is that there may be some illegal activity sometimes going on, such as drug usage or something. When it becomes an illegal activity, generally the law doesn't allow any expenses. So that is when you have to kind of, there's a fine line. So, and then the collaboration, sometimes it can be constituted as prostitution. So it's because they're exchanging services. Will that automatically disallow all expenses because now it's a criminal activity? You have to look at all the facts and circumstances. It gets really gray.
So criminal activity is always a personal expense. I have to put all that in my 161.
Okay. 262.
262.
Yeah.
Okay, so hold on, real quick. So I travel a lot for work, and I go on trips to places where I'm not going to go personally, and I put everything on a business credit card. What's the line, or is there a line? Because I'll obviously flight, hotel, all that stuff is business expense. But like I buy food, if I buy really anything, if I go to an event or something there, I put it all on the business credit card. Is there a line where it's no longer business and it's personal? If it's a trip that I'm going on strictly for business and there's no other reason for me to be there other than business?
Yeah, it's a great question. So first of all, your worst enemy, it's 274D. That's a provision.
I fucking hate 274D, dude.
So that's another idea for a tattoo, 274D.
Yeah,
so
it's my gangster.
Yeah, that is, keep your enemies close. So look, 274D says that everything has to be in writing with business purpose, okay? That's the theory, all right? So the theory says that, let's say that you go, to Vegas for a business trip. Sure, the hotel's going to be a deduction. The flights are going to be a deduction. Now, what about the meals? What if you go to a rooftop and you decide to spend $30,000 that night to buy drinks for everybody?
No big deal.
No big deal. It's all deductible.
Happens all the
maybe
time.
It can happen though, but you have to have the business purpose written down. We don't care about what you thought it was. Did you have it written it down? You have to write it down. You have to say, this was a business purpose. This is what I wanted to cover. It was this expense. Why was that expense? So kind of like explain why you actually had that expense. And that's the theory. Now, in practice, if it's not extravagant, and extravagant means, you didn't spend $30,000, $10,000, $5,000 in one night, in one sitting, generally the IRS may not question it as much. That's the practical standpoint, since we're pretty much in the defense line every single day with the IRS. So if they see something extravagant, a $2,000 bill on a Saturday night, they're also going to look at the calendar, right? If it's a Tuesday, and you spend $1,000, and you have the proof that was the first day of the convention's networking. It's like, okay, fine, but hey, it's a Saturday night and the event ended on Wednesday. Interesting. So that's when it starts becoming questionable, and it's like, no, you're trying to take personal expenses, so now it's going to be at 262. But generally, auto expenses, traveling expenses, meals are included in the 274D, where all substantiation is required. If not, total disallowment. Now, that is in the first line of defense of the IRS. We also have, we can appeal the decision because we have rights, okay? We have rights. So you can appeal the decision, and then also you can take it to U.S. Tax Court when we believe that the spirit of the law meant for you to take those deductions, and you may be able to win depending on all facts and circumstances.
Okay, that's a lot. So,
Yeah.
when you say it has to be in writing, what does that look like? Because say business says go to this place on this day, you buy the flights, you book the hotel. Like, what is in writing? What am I writing it down in?
Let's keep it simple first, and then we'll do the whole business. Let's say right now that we decide to go on a lunch. All right, so we're gonna do some collaboration, and my business, I'm gonna invite you to lunch, right? So my purpose is for us to do marketing. All right, so therefore I'm gonna invite both of you to try to come up with an agreement of marketing. All right, so all that I'm gonna say I had an agenda. I talked about these three things. And the purpose was marketing. That's the title of the session. So we're having a business meeting, right? We're having a business meeting, and we have drinks, whatever. We spend $1,000. That's probably going to be okay because we have the full disclosure of what we talked about it. Now, if you go to Vegas, for instance, think about it. Let's say that it was 5 days, and you went because of one business meeting. All right. So the business meeting, how long did it last? 2 hours. All right. So you were in Vegas for a business meeting that lasted 2 hours, yet you spent 5 days there. Was that really personal? Most likely.
Don't be suspicious. Don't be suspicious.
That's the thing. So bottom line, I mean, we just have to make sure we have an agenda. Like, for instance, we just held a conference. The calendar says that it was going to be 3 full days. You left you left to Vegas a day before, you stayed the day after. I showed up 2 days because I had to set up. Okay, perfect. It's all that is justifiable, right? But if we have, because we see a bunch of people that go to Orlando to a conference, and then they decide the whole entire family to take them to Disney. Well, you see, that's kind of the thing where the conference was only 2 days, but you stay there 1 week. So then you start getting only a percentage of your flights, hotels, so only the proportion that was used for business. The same thing with vehicles. The same thing with vehicles. You can only use the business portion. Everything else gets pretty much disallowed. Tax code is really difficult to understand for smart people. And really, the most difficult clients that I have are very brilliant people, scientists, super analytical people, because a lot of the tax code provisions do not make sense.
Then we would be your best clients. So we're pretty fucking stupid. So you're in good hands with us, bud.
But for real, like, tax law doesn't make sense sometimes, okay? Like, for instance, think about it. How come if I leave my house to go to work, that those business are not allowed for a deduction if I'm going to work? They're not, you see? But there's a lot of things that don't make sense. But it's just, you just have to know the law, and that's how it's written. So therefore, the smarter you are, the most difficult, the more difficulty you're going to have understanding a lot of these concepts, because tax code sometimes doesn't necessarily make sense.
Yeah.
Okay, that's what's interesting.
So note-taking, do you recommend an app people use, like QuickBooks or things like that, and then just label as the charges come in and just put notes in there? So it's all getting kind of taken care of like daily, weekly?
You know, that's actually a really good question, because a lot of people say, hey, I have QuickBooks. And then my follow-up question is, do you understand accounting? Do you know what equity, liability, assets, income, expense? Do you know what that is? And it says no. Okay, then you shouldn't be using QuickBooks, because all you're going to be doing is breaking things. I think that what you have to do is invest in you and your business. Take your business as a fucking business. A business hires professionals to help you understand. You can't do everything in this world. It hires professionals to take care of the professional work. You need to make sure you have a proper accounting records, good records for your business. Run it as a business. And so if I didn't know accounting, you can use QuickBooks, sure, but you don't know what you're going to be doing, and we can't prepare a tax return with your QuickBooks because you just entered a bunch of things and they're all wrong, and you just wasted a bunch of time. And people come back and say, "Oh my God, I invested so much time," and I was like, "No, you wasted a bunch of time because you kind of went into something that you didn't have no clue about, and all those records, I can't even trust them." Like, it's not, I have to be able to determine reliability on the records, on the accounting. And that's our function with the IRS too. It's like, look, dude, these records are reliable. All bank accounts have been properly reconciled. There has been clear separation between personal and business expenses. So it's like, these things are things that are fundamental to gain the trust of an auditor, and also for tax planning and making good financial decisions. Mm-hmm. They give me the profit and loss, and because that they generated, and it's saying that you lost $200,000, and it's like, did you really lose money? Oh no, it was a great year. I'm like, well, that doesn't look like it because you have $200,000 loss. So it's because the QuickBooks is good if you know how to use, if you have an accounting background. If you don't, just outsource it to somebody else and focus in running your business. All right, running your business. You know how to run your business. The accountings, outsource it to somebody that knows. You have to invest. You have to pay professionals.
So how does that work when someone brings someone on to just run? They don't have to think about it at all, or you set up like, just follow these 4 rules. And you check in with them once a week, once a month to be able to handle all that? Like, how are you helping me as a business owner?
Yeah, definitely. So we have this, we generally have the service, which is bookkeeping and accounting, right? So your responsibility is just to follow instructions, which means, you know, you have a clear separation. Because remember, you have control of your business. I can tell you 1,000 times, do not use that business card to buy your girlfriend something in Victoria's Secrets. It happens all the time regardless. And it's like, dude, you spent $3,000 in Victoria's Secrets, and then he was like, how did you know? I'm like, dude, I have the bank statements right here.
Well, listen, if my girlfriend's unhappy, then it's going to affect me at work, and I'm going to do really poor job in my business, so I have to buy this lingerie.
Yeah.
I'll spend anything to that.
So, but that's the thing. You're breaking the corporate veil if you're a corporation, and that could also be a criminal offense. It could be an alter ego. It's like my other me. I established this business just to kind of run my personal issues, and the facade is a business, but everything behind it's all personal and bullshit. So it's kind of that's how they see it sometimes. So remember that you have a corporation. The corporation gives you some type of protection. You as an individual. So therefore, you can if you're saying that you're separate, keep it separate. If you want to take your girlfriend to Victoria's Secrets to buy her something nice, what you have to do is either take a distribution from that account. Remember, it's separation. That's what we need, separation. All right? You take the $10,000 so she can go crazy with her money in Victoria's Secrets. Perfect. Go ahead and transfer that. Transfer it to your personal bank account. All right? Anytime you buy something that is business, you run it through that account. And you don't pay any cash. Cash is a mess. You can't trace it, and it's very difficult. We've defended businesses, $15, $20 million gross incomes that run all cash. It is a mess. It is a nightmare. You're going to stack up a bunch of professional fees representing you before the IRS. Can you do it? Sure, it's not illegal, but it's a mess. You don't even know how much you made, which is also with the cannabis business right now.
I was going to ask you, what businesses are you operating with that are all cash?
Cannabis business, because remember, a lot for federal purposes, it controls substance.
Illegal.
Yeah, it's still illegal. In the state, it's legal. So that's when it becomes a little difficult because if people don't have good internal controls, well then it's like, how much should you even make? So there's a lot of people that run cash. I mean, and it's not just cannabis. It's also construction workers, construction companies. Nobody wants to pay taxes. I get it. But so therefore, they don't ever want to give you people don't want to give you their social security numbers so they can issue a 1099 so you can pay their taxes. So therefore, it's like, here, I'll just pay you cash. But as a business owner, you're going to miss out on those deductions. So it's
right.
Yeah. You're going to go under.
Yeah, that's not good.
Yeah.
Yeah, when cannabis became legalized in Washington, it was like Washington and Colorado were the first two. And I worked in a cannabis shop for, I don't know, like 6 months. And I remember this being a huge point of like difficulty and contention for the owners. And I didn't care. I was just the dude that rolled up joints and, I smoked it with the people walking in and tested. Yeah, we were like, what do you think about this strain? But I remember they were always like just in a funk because it was all cash. Everything was cash. And they're like, we had so many issues. We couldn't even go to the bank to deposit the money. Like we would do it, and every time it would be an issue with the bank because they're like, yeah, we can deposit it, but it's technically like a criminal offense. So like the bank was weary whether they should even take it. And this was like the first couple months after cannabis was legalized. Such a mess.
Yeah. No, it's a mess. And then it's just like with every business, right? We need to make sure that we have proper accounting records. All right. Yes, you for federal purposes, you can't take any of the operating expenses. However, cost of goods sold, you may be able to take the cost of the marijuana. So it's kind of like you need to make sure you have proper records. With every business, you need to make sure for you to understand your capabilities. Are you familiar with this? If you're not familiar, seek for help. We don't master everything. I mean, sometimes you need to reach out to a professional, and I have somebody that do it for cheaper is going to get you in problems. You have to hire somebody that's really knowledgeable in whatever industry you are in. You know, like cannabis, it's its own industry. So you need to make sure you hire a certified public accountant that understands the business. The same thing with people that, construction, oil and gas. I mean, you need to make sure you hire people that specialize in those fields. It's not one size fits all. And then the other thing, a very common misconception is like, oh, he's a CPA. Oh, he's a tax attorney. Oh, he's an enrolled agent. That doesn't mean that they're good at what they're about to offer you. It's like, what do they specialize in? I specialize in tax controversy. I fight with IRS daily. That's what I specialize in. All right. And the reason the reason I get familiar with like tax planning, because I see all the mess that's being created by social media. The first one, we talked about the myths sometimes. It's like, establish an LLC and put your house under the LLC where you live. I'm like, what? That makes no sense. It's like the LLC is generally for protection purposes, right, at the state level. And now this does not constitute any formal legal advice, but it's generally for protection purposes under state law, and it's because you intend to maybe run a business with it. All right, a personal expense, it's going to be your house. The other one is like, why don't you know that you can establish the LLC and buy a G-Wagon and it could be completely deductible? It's like, what is the business purpose of that? What exactly is your business purpose? Because remember that at the end of the year, you're going to have to take the percentage of business and personal. So it's like, what was the economic substance on that transaction? What was it? Was it just because you just wanted to evade taxes? Because remember, it's tax planning and tax evasion. One of them is a crime and one of them is a benefit. So
it's a thin line between the two.
Well, yes, there has to be economic substance. It's like, why do you need a G-Wagon if you are a barber?
To fit all my scissors.
Yeah, that's right.
So it just has to make sense. So if you get like in trouble, you can present it in a way that's like, okay, that's logical, and you're figuring it out, so you're prepared if anybody comes at you. So like if you had a G-Wagon, you could say like a percentage of this, yes, is good, but yeah, maybe the rest is because I wanted a nice car.
So yeah, what you can do actually, it's another way, which is maybe, and this is a benefit for all these people. It's like just you establish a business, right? And you can give yourself some type of, it's called an accountable plan. You establish an accountable plan with your business, and it can actually reimburse you for the business use of your car, and it's a deduction to the business, but you don't have to recognize it as income. But it comes back to the same thing. Everything has to be organized 100%. You have to have everything in writing. What was the reason behind this? Remember, if you want to be aggressive in tax planning, do it. I don't want you to pay a single more dollar than you have to. Remember that the Taxpayer Bill of Rights, it says to pay the right amount of money, not a dollar more, not a dollar less. Absolutely, we agree with that. So be aggressive with it, but make sure you're ready to prove it, that there was a true economic substance, there was a true business purpose, and it's accepted within your industry. You know, if I have a business of exotic car rentals. All right, well, then that makes sense why I bought a Ferrari. You see, but it's like, what do you do? Is it accepted in your business?
What about the trend of people who buy, let's say, a G-Wagon, a Lambo, whatever, and they use that to make content because they're a content creator or they have a brand online, and then they use that to deduct because they're filming videos in it, they're using it for content. Where's the line where that's now a business expense or maybe personal?
Yeah, and that's the thing. So a lot of the I guess the fundamentals of this is this. They're going to analyze the usage of the car, all right? So the car generally has miles. Sure, you use it to film content. However, what did you do after filming the content?
Are you still driving around, going on dates
being
and whatever?
flashy to pick up girls? And like, okay, if that is the case, well, that's more of a personal expense.
Yeah.
But the thing is, they may allow a percentage. So, but think about it. Let's say that, I don't know, Ferraris are not that cheap. So therefore, you only used it 5%. So all that is 95% is going to be personal. You're not going to be able to take a deduction. So it's like, we're going to have to take the prorated rate. Is like, how much did you actually use it for business? And that is what we're going to be able to deduct.
Okay.
Yeah.
Here's a better example. Let's say we buy a G-Wagon and we wrap it and we brand it with the Two Fun Guys logo. It's to the nines branded out. So it's obviously like an advertising vehicle. And we drive that around. And we drive it for personal use, but every time we drive, it's advertisement. Where's the line there?
That has been 100 times brought up in court.
I'm sure.
Yeah, it is so common. Oh, I put the magnet and then I just take it off. Well, they get creative. Just because it's branded, it doesn't mean that that you can take the full expense. I'll give you a true, I guess, a way that you could defend this, okay? Let's say that you have a business place, which is a formal business place where you have a garage, okay? Every time that car gets parked, it's always in that garage. You have your personal car that you drive from your home to your place of business, all right? So that car always gets parked there, and it's only available during business hours. So then that's truly, and then let's say that you have a marketing a person that drives that car around town. Well, then that way, it's like, okay, well, it makes sense. You're not really getting any personal benefit from it. It's truly just a business. But what happens is, like, that's not what people want to hear.
Yeah.
Right? I just told you everything you didn't want to hear. It's boring. Right? That's the thing. And so when people hire us, it's like, by the way, you're going to pay me a lot of money to tell you things that you don't want to hear, but you're going to be able to have the peace of mind that you're not going to get screwed later. Because if you do, okay, and let's take this scenario. Let's say that you do all these tax planning, but it's really more like tax evasion, okay? And you saved a bunch of money on taxes. And what did you do with that money? Did you spend it on women and drugs? That's actually better, by the way. I'm going to tell you why. Or did you buy property?
I like where this guy's
real
going.
Estate, and you bought real estate, okay? So therefore, let's say that everything goes south, and now you owe all this money back because everything was disallowed. Oh, look at that beautiful mansion that you bought. The government can actually go after it and seize it, all right? But let's say that you were actually a fun guy, all right? And you spend it in women and drugs.
They can't take that away from me.
Nope. So that's, I mean,
sorry,
not to incentivize and to, to celebrate the lifestyle, but I mean, remember, if they can't really collect from that, then it's
Well, it doesn't have to be women and drugs. It could just be experiences that they can't take away.
Yes, but the other thing is something that I do want to mention, all right? It's not as happy as I just put it, because you may not be liable to pay back any money, but if they determine that you did it with the intention to defraud, you can end up in prison, though. Okay? Yeah, you don't have a tax bill, but you have restitution charges, and then you also have something else. So therefore, I just kind of want to point this out. Generally, people that have been owing money to the IRS, and you pretty much let's just say that, yeah, you were just a financial mess. You never saved it. You always went out for dinner, whatever. So therefore, you have no money to pay back. So the IRS has no other option because they don't want to waste resources chasing somebody that can never pay a bill. So therefore, you just have to be careful with that example that I just gave you. They can disallow it and you don't have any equity anywhere else. You may not end up paying anything. However, if you did do it with the intention of defrauding the government, well, then you could end up in prison by criminal investigation that can pursue your case. Yeah. But you can make it to press release. You're going to be a little famous. I mean,
that's good.
Is there a certain level of revenue where this becomes more and more important to have your shit together? When it comes to, like, if you're only making $50,000 a year revenue, not even just like what you're saying is income or anything, as a small business, maybe it's like, okay, I probably like it's very simple. I probably have a few deductions. It's like pretty easy to manage. Is it like when you reach 100,000, 200,000 revenue, a million, that it starts to like, if you don't have that really detailed, records, that you could just like the IRS is looking for you. Like they want the big dogs, right? They're not probably looking potentially at the small ones. Not saying you shouldn't get all your taxes together and figure it out. So when you do make money, you have your shit together from the beginning. But I imagine there's certain numbers you hit in revenue where like the eyes, zoom in on you.
Well, first of all, when people ask me, hey, when do I need to hire an accountant? Okay, I'm going to break that into like two parts. When do I need to hire an accountant? I'm really small. And then I was like, why your self-esteem so low? Believe in yourself. Do you want to be always small? Okay, well, you have to build a proper foundation from the beginning. Even if you're just starting out, you need good books. You need to hire an accountant. You need to hire an advisor to advise you so you can eventually become big. Now, when it comes to I guess the red flags from the IRS, what's the IRS looking at is truly, once you have, okay, Schedule Cs, by the way, are the most audited out of all of them. Schedule Cs is the sole proprietors, all right? Why? Because they're generally a mess. That's how everybody starts because they're small. They're small, but they're a big mess because they're keeping everything commingled. So they don't even know how much they actually made, all right? So therefore, Schedule Cs are the most audited. Well, if you have huge losses, if you have a very small profit, there's $100,000 gross income after all the expenses. Let's say that you end up with $10,000. It's like, well, you made a very little profit, and so you know now about diff scores. So we're going to probably generate a big diff score. So therefore, you're probably going to get selected for audit, and then they're going to ask you all this, for the books. You don't have any books, so therefore, it's like, first, why are your self-esteem so low? Let's work on your self-esteem first. It's like, do you want to be always small? Do you want to grow? Why are you starting this business? Are you starting it to fail? Because that's what you're looking like right now. It's like, no, let's get the fundamentals. Let's get proper accounting. So then next year, right, let's say that you start as a Schedule C, that's fine. All right, it's small. There's nothing wrong with being Schedule C, but eventually you're going to make more money that we should probably transition to a corporation, do some tax planning, keep more money in your pockets, net worth, higher net worth. But let's take it a step at a time. It's foundation first. That's what I always recommend.
I mean, it makes sense. We have, when I was really young, my dad was always against like having a tax person. We'd sit there and we used TurboTax, and it was like the most painful experience. Trying to figure that shit out, and you're like, what percentage of this? And he's like, what was this thing you spent money on? I'm like, I don't fucking know. And then we're like going through it, and he's like, he's stressing out because he was a financial guy, and I'm like 16. I'm like, I don't really give it. Like, what does it matter? I was like, I don't know, just put whatever.
Yeah.
To be fair, you're still that way at 40 years old. So I don't think being 16.
But that's why when we started a business together, I was like, we need an accountant, right? And like, I see the value in it so much. Yeah, it's super important. But I think, in addition, like you're saying, to actually have an accountant or someone that really understands the tax code, to have you educate us to really understand what's happening as well, and then giving us the mental plan and strategy of how we spend our money and think about purchases and investments in our business. I think that's invaluable to not just having an account, but to have that education piece, because then if you understand your money, you're going to keep more of it.
Yeah, absolutely. Look, hiring an accounting or a tax person is just like dating. I mean, it's just like dating. It's like, are you the right person for me? Do you know what you're doing, or do you specialize in the field that I work in? Maybe you're great at oil and gas, but you don't even know nothing about influencers, for instance. It's like, this is just like dating. We need to make sure we screen, we talk, right? You talk to the accountant. What do you offer? What do you do? How long have you been in business? Interview them, because the issue here is that you cannot just hire somebody that has a credential. A credential doesn't really mean much. Sure, attorney, CPA, enrolled agent, it doesn't matter. Yeah, we're all authorized to practice before IRS. However, we specialize in different things, right? Like, for instance, if you come to my office and you're like, hey, Ruben, why don't you advise me on oil and gas? I'm like, I can't. I'll send you to somebody that can, but we have to be transparent with the clients. And I think a lot of tax professionals, they're kind of afraid of losing the client, so they kind of I don't want to say they lie, but they're not as transparent, and they're kind of learning as they go, and that's a problem for you. So therefore, do you want somebody to bill you and they're practicing with your stuff? I wouldn't. And it's just like dating.
Well, yeah, you're also giving them your information, your bank information. Like, yeah, you want to really trust that person.
You want somebody that's trustworthy, that knows they're members of at least the national societies, that they're good standing with a bar. You do the full blown interview. You have to do your due diligence as a business owner. You can't just hire somebody. Yeah. There's really good attorneys. There's really bad ones. There's really good CPAs, really bad ones. So you need to make sure you screen them properly, because then at the end, remember, everything comes back on you. Everything comes back on you. Blaming your CPA, we're not going to get you off the hook automatically. So it really comes back to you, because at the end, when you sign their engagement letter or their contract, they kind of like, well, you brought me all this stuff. If it's wrong, then it's wrong. Yeah. And then it's like you and the IRS and your accountant, pretty much, you have to do your due diligence.
So aside from picking somebody that knows your industry, you also mentioned making sure that you get a pro and not someone who's, going to fuck it up. What questions should you ask your tax professional to make sure that you're getting a pro?
Well, first of all, a professional credential. All right. There's 3 professional credentials in the industry. It's a certified public accountant, which generally they go through a master's accounting. They sit for their bar exam. There's a tax attorney that they go through. They have a Juris Doctorate, and then they take their bar exam. And then there's an enrolled agent, which is the highest credential of the Department of the Treasury that pretty much all 3 professionals are authorized to represent before IRS at all levels. All right. Now, the tax attorney and myself, I have a specific credential that have been admitted in U.S. Tax Court. There's only about 300 people that have passed this exam, which is it allows us to go and pretty much follow a judicial review, a suit to the IRS. A petition against with a U.S. tax court against IRS.
So you're one of only 300 people.
300 people that have passed
good
that
flex.
Yeah. No, thank you. But the issue here is that you need to kind of screen to see what professional fits your needs. If you're in tax problem, you kind of want to hire somebody like me. If you have a person that you want proper books, proper accounting, you want to go more to the route of CPA, but with an experience, right? So first screening is a professional credential. If they don't have a professional credential, I would think it twice, because at least they have proven some competency against a bar, with a bar. So therefore, I would always want to go through somebody with a licensed credential. And then after that interview, what do you do? Do you have a lot of, if I have a restaurant, like for instance, our accounting firm in Austin, Texas, we have a lot of restaurants. Our accounting firm, it's a family accounting firm. We specialize in restaurant bookkeeping and bars. It's restaurant and bars. All right. That's what we do. So therefore, what does the accounting firm specialize in? What do you specialize? There's accounting that specializes only with influencers. So we have to ask that first, professional credential, then second, what do you specialize? Yeah.
So why did you pick the hardest? Texas is already fucking crazy hard. I remember I was at a coffee shop one time, and this girl was studying to become an accountant, and she said that every year they change stuff all the time. It's literally always,
tax code is different all the time.
It's like if you learn mathematics, and every year all the addition and subtraction means something completely different. And then you do that, and then you're like, I'm going to go against the government. Like, you want to be stressed? Like, you like being stressed out? Like, you must have some crazy.
Do you have a death wish? Is the question?
You must. Like, why do you love it so much?
I didn't just get back from Vegas. They actually let me out from the Lily bin right now. Yeah, but
no, it's awesome. It's like clearly you're super passionate about it, and it takes a certain personality and be able to handle stress and be able to be educated on all these like kind of like algorithms of figuring things out. Right? Can't do this, can't do this, can't do this, can't do that. Yeah. Right? And then now go against somebody who's trying to, come after you.
Yeah, I was raised in the field. All right, I was raised in the field. My mother's a CPA, sort of a public accountant. So, ever since I was 3, I was filing them paperwork and put them in the filing cabinets. Come on, put them in alphabetical order, blah, blah, blah. So I've been seeing tax returns all my life. So therefore, when I was 13, I already knew how to do corporations, all that other stuff. But dude, that was really boring. Accounting is boring. Like, it makes me sick, nauseated. Just imagine the worst terrible hangover. That's how it feels. All right. So I said, screw that. I don't want to do this. So I actually went to college to eventually I want to go to medical school, but I got really freaking impatient because I kept getting accepted to the schools that I didn't want to go. So I was like, whatever. So I was like, I'm just going to go get a job at this laboratory because I graduated with biology. And they were paying me $13 an hour. My mom was paying me $40 an hour. So I'm like, can you take me back? This sucks. So long story short, they said, well, you know what? If you want to be in this field, my mom was like, you need to get a professional credential. And I was like, I don't want to be in this field. But then I noticed how there was so many people screwing up audits. There were so many people getting their stuff levied on, people that have worked all their lives and was getting everything taken away from them. I was like, there's definitely a need here. Like, you know what? I'm going to make my own little like career over here of specializing in tax problems. I just like tax problems. I don't want to do a single return. You can't pay me high enough to do your return. I do not want to file your return, but I want to fix your tax problems, the tax fuck-ups, because I love it. And the thing is that, you see, you get selected for an audit. We defend your position. Sometimes we win, sometimes we lose, depending how. I mean, there's some people that are truly a mess. They have nothing. So therefore, that's how I got in the field. There was a true need. Nobody understands it. And the thing is, I want to mention one thing. The IRS has a very important internal book. That's another idea for another Saturday night. The Internal Revenue Manual. Okay, the Internal Revenue Manual. So that's the manual that they use to train all of their employers, auditors, officers, and everything. So if you read that manual, you be thinking like a IRS auditor, IRS officer. So therefore, that's how you get familiar with the tax rules and regulations, because that's how the IRS thinks. All right. So I started to read that and I said, now I know why they did that. Now I know where they're doing that. And it helps you understand. It opens up your eyes and it's like, oh, it's because it's in the manual. So now we train hundreds of tax professionals across the country, and they're like, why does the IRS do that? And I was like, because they have to. It's in the manual, and the manual is kind of like a watered down Internal Revenue Code. All right, the Internal Revenue Code. I don't know if you ever try to read it. It's almost impossible to read because like what you can read.
I can assure you, I have not tried to read it.
Man, you can read the damn paragraph 13 times. It's like, what the fuck does that say? Like, I don't understand it. But then when you go into the Internal Revenue Manual, and it's like, oh, that's the paragraph that I understand. So that's how you apply it. So it's really important. I mean, I'm not telling you to read it, but that's how we get familiar of how to represent taxpayers before the IRS. It's an important tool, because now I have so many people. It's like, okay, I just hire you, but it looks like you're against me. It's like, no, you have done things so bad. Okay, so bad that you're putting me in the spot. Remember, I'm the damn punching bag. You punch me and then they punch me. All right. So I got this taxpayer. What the fuck are they doing? And then it's like your taxpayer's doing this, and that. Is like, hold on, everybody, shut up. Let's take it a step at a time. You see, so we're the punching bag. All right. So therefore, it's like, no, you pay me. Right. Remember, not to tell you what you want to hear is all your mistakes. And unfortunately, this is a true reality. When you walk into my office, you walk in with a headache, you're going to end up with a migraine, because you probably are doing more things wrong that the IRS has barely catched. And once we have that conversation, everything's going to come into the air. So it's like then they've done that, because remember, that's just a preliminary screening. The IRS has just a little bit idea about you. You just came to my office and told me all this fuck ups. So now it's like, you don't have a headache, you have a migraine. So it's like this thing got a lot worse than it was, because remember that if there's a true hardcore omission, all right, they can audit, they can go back any years and audit, because generally IRS has 3 years to audit your return, and then it's determined to be a close year. If they find a true omission, or significant omission, it could actually go to 6 years, or if it's fraud, they can just go unlimited. They can audit any year that they want. So that's the thing. The number one rule is report all your income. I'm going to pay a lot of taxes. Stop crying and do tax planning. Is that you have to do tax planning. So but report all your income. Not reporting your income could be a criminal offense. So it's like you need to make sure you do that. So that's my recommendations generally with all these people.
Yeah. Well, dude, thank you for dropping some serious knowledge on us.
My mind's blown. And it makes me excited to learn more about taxes.
Yeah, you've properly scared us. So we're going to go have a conversation with our CPA, dude. So how do people find you? Because obviously, I mean, you said your family's firm works with restaurants, bars, but I'm sure you have a particular industry that you work with, or maybe you work with a ton of people, but who should contact you and how do they find you?
So generally, well, first of all, they can find me through Instagram, Tax Pro Ruben. I also have Facebook, and I actually give classes, free classes every week as on Facebook Live and Instagram Live. But which people should contact us is if you owe money to the IRS. If you owe money, you need to make sure you come forward as soon as possible. Current events, they're not looking too good. They can tap into your account. If you have an employer, they can contact that employer and they can tell them to send the money to them directly. So you need to make sure that you act, you're active about it. The problems are not going to disappear. They're just going to become bigger and bigger and bigger. And the longer you wait, the more expensive it's going to be. You should also contact me if you've been selected for audits. You can represent yourself. Should you? No, I do not recommend this, okay? This is not a joking matter. There's a lot of people that are new at the IRS that are not even following the rules. It's the blind leading the blind at this point. So we want to make sure that all your taxpayer bill of rights are protected. And then also, right, I always say that an audit is kind of like a little cancer dot right here. You can spread through the whole body real quick if something goes south. You can even sometimes people are not even liars, but they're so nervous with a revenue officer, with a revenue agent, that they actually say a lie to them. They just lied to a federal officer because they were nervous. So it's like, do not do this. Do not do this alone. Hire a professional, because sometimes because you want to save a little bit on the money side, you're going to end up owing a lot of money. Or, I mean, depending on facts and circumstances, they can also refer you to criminal investigations. It's important.
Yeah, it's the same as if you get convicted for a crime. You're like, you really want to go in front of the judge and represent yourself and try to prove a case against the government? That's crazy.
Yeah. No, you definitely need a professional by your side for all this stuff. And then also, if you think that you're paying too much, you need to first be organized. Once you're organized, second step, tax planning. Don't start tax planning if you're not organized. That's the number one thing. And for people that are starting out and they really don't want to hire an accountant, which I strongly not recommend, but they don't want to hire an accountant, just open up a bank account, keep everything separate, all right? Make an end of the year or every month, but end of the year, at the end of the year, make sure you have all the totals of all your expenses and all your income, and you're already like 70% there. I mean, if you don't want to hire an accountant, just do it on Excel. Don't go into QuickBooks because you don't know the nature of accounts. Do it on an Excel sheet, all right? If you really want to save the money, but go ahead and just open up an account, keep everything separate, put your expenses, your income on an Excel sheet, and that's about it. I mean, you're more there than you were.
Super good advice. One more thing. I know you're passionate about like Latin business owners. Do you educate? Could you talk a little bit about that before we close out?
Yeah, absolutely. So I actually have an academy, it's Latin Tax Academy, which we provide IRS approved and California's approved continuing education. So we train tax professionals from zero to eventually become an enrolled agent, which is the highest credential that the IRS awards. So we hold conferences nationwide. We have students from all over the world at this point. A lot of from Latin American people. Our classes are in English. We do have the plans to eventually branch out a little bit in English. There's a lot of English classes, but in Spanish there was not. So it's a very good market, and there's definitely a need for this. So yeah, we provide continuing education from zero. You never prepare a return all the way to eventually become an enrolled agent, which is the highest credential.
That's fantastic, brother. Well, thank you so much.
Perfect. No, thank you.
Yeah, thank you, Ruben.
Love it.
Thank you.